Jerome Powell definitely upset the market today. Although he said that he believes inflation is not entrenched, he said that the rate at which we will have to hike may be higher than previously anticipated. Although he said that if the data becomes rough for the economy, they may look to have a pause, but are not looking to reverse policy going towards monetary easing. They want to stay on the path of tightening. The fear that's ensued has brought the market to some critical levels that we need to talk about. We're also going to go over some earnings, do a recap of what happened last week, what we're looking for, how trading went, and we also need to talk about what sector seems bullish regardless of what's going on with the Fed. So let's dive into the weekly report. I'm going to be trying to do these now on Wednesday rather than Sunday because Wednesday's usually when people get around to watching them. Hopefully this is helpful. Let's dive in. So let's do a recap of last week. So far in this earnings season, it definitely looks like we're in an earnings recession. Now, there were some big winners that I was actually trying to short that actually still did well though. And that was Enphase and Apple. Absolutely killed it. Enphase, even though the solar power energy seems to be having some downturns and the housing market's having some downturns, I think there's a strong correlation there. Enphase was still really strong. Apple was also really strong despite demand dropping off in China and the decline in iPhone sales. Meta was a really interesting earnings, even though my bullish thesis played out and the company actually is still making great revenue, still has great margins. People are really upset about the amount of cash that Meta is spending on the metaverse. There's not a lot of confidence here that Zuckerberg is making the right decision. Now, whether this is correlated to the actual timing of the decision of how much capital they're spending, or whether people just believe that the metaverse is nonsense, which I hear a lot of, especially from the crowd that also doesn't like crypto, which I also think is nonsensical, it's hard to say. Now, I think that it's a great decision. Do I think that people will start to live in the metaverse, spend 8 hours a day in it? No, but I think you're going to do everything that you do today just in the metaverse, and I don't think it's that far of a stretch to get there either. So I think if you have great convictions in this company or looking for a trade, it definitely looks ripe for a bounce back. However, I think it could be a value trap in the medium term, maybe for the next year or so, before we actually see these technologies begin to take off. There has been some winners as well though. Shopify was a huge winner for me. And remember, the way we set up these earnings plays, you only need 1 out of 5 to actually hit. So we ended up faring just well and had some great scalps during the week playing these volatile times on the market. And speaking of winners, let's tune back into energy, where I've been having a lot of wins. Going back into CCJ, they did really well on earnings. I expect them to continue to do well. Looks like we completed an 8-wave pattern. I'm expecting this to then play out the super cycle that we've been expecting. The energy crisis is still on the table, still a major conversation, and I expect uranium to be a key component to overcoming that. Also, what's been a winning play right now has been USO. I'm looking for this to catch up to the reality that we're seeing in XLE. These energy companies are killing it. XLEs looks like it's headed for a new high on the way. Remember what's going on what's going on with my cam, if I can move that so you could actually see. What's been going on is Biden's been suppressing the prices in the market by draining our reserves. He can't do this forever. And in fact, diesel as well looks like it's at a critical level where there could be some major price squeezes. I think there's new highs headed both for gas prices and for oil prices. And we're waiting for USO to actually catch up to the realities that we see everywhere else from these energy companies, which are saying, hey, prices are going to go higher. They know the energy market better than the politicians, better than the reporters, better than people saying, oh, it's fine because the gas prices are down and they've been down, so everything's okay. Yeah, well, where is the supply that we need going to come from when we start draining it from our reserves? That's the question no one wants to answer. And if we look at UNG, this has been great as well. Saw this key level here come in for the bottom. When I saw this starting to fire, went ahead and bought some calls here. This has been playing out well. We aren't to where the coldest months are, right? Those still haven't come around yet. Look how far UNG's fallen. It's more than 50% drop from the highs. Yet I see no reason to think that there's going to be some actual relief in this market, at least for several more years. So UNG, another one. I again expecting the super cycle, and now at the levels where these have appreciated, I'm waiting for fundamentals to start playing out again. I think the energy sector looks ripe. I am bullish. Another stock I want to highlight is Coinbase. Now, Coin's been doing really well. It's been really fun to trade, really profitable. We can see the TTM squeeze still fine. We're still in the green, but it looks like it's trying to turn over. It's a little bit worrisome. Look how big this wedge is. We can see it touching the top and the bottom of it, and it looks like it might try to break to the downside. Now, earnings is tomorrow, and it's hard to say what I'm anticipating there. Now, we know that volume has been increasing for the NFTs. Ethereum's been traded more. Some interest is coming back. We recently saw Dogecoin spike, and I'm wondering if that's going to give a nice boost to the earnings report tomorrow. They've also launched their Coinbase Pro, and I am really interested to see how those numbers are, but it's really hard to have a short-term thesis here. Now, I'm still long on coin. I still like them in the long term. I think BlackRock as a major investor is a huge bullish sign as well. And I know there's a lot of nihilists in the crypto space, but I have yet to hear any good arguments for being negative on crypto. Now let's talk about the critical levels in the market. We can see that we're at a critical level here on S&P. With these triple bottoms seeming to come in, this would be pretty close to the bounce range. I was looking for a wave B development. I was looking for either a top at 390 or a top at 400. For a while, it looked like we wanted to push over into the 400 range. Now with this news out though, it looks like we're getting the corrective wave into B. So maybe we even hit this level as early as tomorrow before the end of the week before we spike up. Now this would be important because if we look here at the trends that we normally see heading into the election, we could see that it's pretty common to have this sell-off at the beginning of November before we get that midterm rally, which can last for quite a bit. Now, the macro environment in general is different than it was in the past, so we can't say that this is going to give us a map or a plan of action heading into the elections, but we are expecting, I'm expecting at least some sort of rally here. If we also look at this image, and actually let me pull it up right here. This was shared by one of the hedge fund managers in the Discord as well, and he's also noticing a very critical level is playing out on the NASDAQ as well. Now, if we do plunge through these levels, there's going to be some further lows and some pain on the way, and we might have to be looking at 365 or even lower. And actually, if I even redraw my lines here, if we see a drop further below this 374, we'll probably look for 364 before we see a turnaround in the market. Now, I want to take a moment and just talk about the narrative that, hey, the market's getting bullish because it looks like the Fed could pause or pivot soon. And so people are excited about that because it could bring about some monetary easing. Now, Jerome Powell came out and said that there would be no monetary easing. However, the Fed has a track record of pivoting and supporting markets whenever we get crashes or anything that is outside their realm of expectations. And their realm of expectations has been shown wrong. Their track record in history is not all that great. And one of the things I want to point out is something that Alf, who's a former hedge fund manager, $2 billion hedge fund manager, pointed out on Twitter. I thought it was great because it was the exact same thing that I was thinking. And he's so concise, so precise. And he's also written some of the education in the bond section as well for the Discord. But let's tune into this. In early 2001, the Fed pivoted as earnings in the labor market were weakening after the animal spirits ran hot in 2000. The Fed cut by 150 basis points in a few months, yet the US dollar appreciated by 60% and equities dropped another 10%. This is important to consider, okay? Because the market is saying, hey, everything's great, everything's dandy because the Fed might pivot soon. And when the Fed pivots, everything's going to be fine. The market's going to rally up. However, history would show you that that's not always the case. Sometimes the Fed pivot shows how bad things truly are, and then the market reacts to that as being bad news. So keep in mind, the Fed doesn't look like they can win because if they continue tightening, they'll probably put us in a recession. And it's not clear that they'll actually defeat inflation because inflation does look quite entrenched, although Powell said he doesn't think it is entrenched. Like I said, that track record. But on top of that, when they do pivot, it doesn't necessarily mean that it could be good news. It seems like there's lose-lose everywhere. However, this lose-lose everywhere, this horrible sentiment, these terrible things that would make you ultra mega bearish Doesn't that sound like the best bullish case possible? Because when do you make the most money? You don't make the most money when everyone's freaking out and everyone wants to get into trading and everyone's excited. You make the most money when people are in desperation saying this is horrible, this is awful, this is the end of the world. The world is undefeated when it comes to ending though. And so in these time periods, if you can buckle down, you can get some grit in you and you could say, no. This isn't the time to be in despair. This is the time to make money. When people are freaking out, when they don't know what's next, when you see reports that there's going to be a nuclear war and everything's going to come to an end, holy cow, that is where you can make tons of money. Not when the market's near all-time highs and everyone wants to get in the market. When they go away, we see who the real ones are, who's going to stick it out, who's going to learn the knowledge, who's going to keep up with it. And when you come out on the other side, you're going to be loaded. So who's along for the ride? Hope you enjoyed the report. See you next one.